What is going on, No Limit family? Welcome back to another video. If you guys do not know who I am, my name is Luca and I'm here to provide as much value as I can to you guys. And today we're going over what are the most Googled Forex questions so I can answer them and hopefully provide some value to you guys in the chat. So as you can see, I just typed in what are the most Googled Forex questions. I'm going to go through and answer some of the most ones I think will help you guys in the chat. I'm not going to go through and answer all of them. Some of them should be pretty basic. I'm not going to waste my time just answering what is Forex, but if you don't know what that is, it's just the trading of exchange rates. But we're going to go through and answer some of the ones I think will benefit you guys. So let's say what makes market price fluctuate? What makes the market actually go up and down? That is the buying and selling pressure of people in the market. So if price is bullish, that means that there is more buying, buyers and sellers, that's pushing price up. If price is going down, that actually means sellers are in control, actually pushing price down in a bearish trend. So basically it's just money, liquidity, and where price actually is getting pushed is basically what actually, pushes the market and makes it fluctuate. Is trading risky? This is a simple one, but I want to go over it real quick because yes, trading is risky, but what I want to answer is that there's probably people out there who really do think trading is a gamble and that you're just kind of like, you don't have an edge in the market. But I'm here to tell you guys, I've literally showed so many people and proved to them that there is an edge in the market if you really pay attention, study, data, create a really bulletproof strategy in the markets, and then follow it. Guys, you can definitely get an edge in trading, which makes it way less risky. What style of trading suits me best? So that's pretty a good one. So for anyone out there, what trading style suits you best? Because there's scalping, there's day trading, there's swing trading. How I think you have to pick what kind of trader you're going to be is, first off, what does your schedule look like? Do you have enough time to be in the markets, scalping in and out of, positions? Do you have the patience to be a swing trader, get into a position to hold it for a couple days? I think it has to do with what kind of person you are. For me, I don't have the patience to be a swing trader. That's why I'm a scalper. So it's really up to just kind of, looking at yourself, maybe try a couple of them and you'll be able to tell which kind of trader you want to be. And then from that point is you're going to get a strategy through it. How you're going to get a strategy is you can see right here where it says, where can I learn more about trading? I'm not here trying to plug my mentorship or anything about learning from me because I have a bunch of free videos on my YouTube. There is so much free information on YouTube, but I am a big believer in analysis paralysis. What that means is that there's so much information, that there's all these different strategies on YouTube. If you guys go and try to get all these different strategies, when it's time to go to the charts, you're gonna see buys because of this one strategy. You're gonna see sells because of this other strategy. You know what I'm saying? And all that combined is what you call analysis paralysis, information overload. It's really going to mess you up in your trading. So my best advice is to pick one mentor, or even if you don't want to pay for the mentorship, pick one YouTube channel on how they trade. Actually trade the strategy, back test it, collect data on it, and figure out what are the best times you should be trading. What are the most high probability win rates? What do you have to kind of wait for to make that strategy kind of work for you? And then from there, like I said, you're just collecting data and you're getting better day by day, night by night. But if you're not collecting data and you're just buying and selling just random strategies all this different time, there's no way you can actually get better at trading. Popping over to another website, you can see here there's some more questions. So what time is the Forex market most active and why? So there are three major sessions that are traded in a day. It is the New York session, there is the Asia session, the Tokyo session, and also the London session, okay? Those are the biggest, sessions for you to trade. For me, the market is the most active during New York session. I think it has the most volume. The second would be London session, and then Asia is the third. I don't really trade Asia. It kind of consolidates more. If you're a trader, you want pairs to be pairs, indexes, whatever you trade, to be going in a direction. If it's choppy, there's less movement, less money to be made. But if you actually get volume and direction, that's what you really want, which all that volume is going to come from trading in session during London Open, which is at 12 p.m. PST Standard Time, Pacific Standard Time. For me here in California, it's at 6:30 a.m. Pacific time, which is 9:30 a.m. Eastern for the New York Stock Exchange Open. And then for Tokyo session, starts at 4 p.m. my time, Pacific Standard Time here in California, which is 7 p.m. Eastern. So those are the times the Forex market is the most active. And why is because that's where the banks and stuff are opening. There's the most trading going on. And once again, how does the market move? Based upon buying and selling pressure. So that's why the market is moving the most during those times. What is spread and how is that calculated? That is the difference between the bid and the ask price on a given pair. You'll see sometimes when you go to enter a trade, it's not getting you in right away. It's getting you a little bit above. It's based upon how big your spread is on that pair, which you can look up on your broker, on your prop firm. It'll literally show you how big your spread is. And it'll show you it right on your, right on the broker, right on the app that you're trading on. How many trades can you open at a time on Forex trading? Basically until your margin busts, but I do not recommend that. I recommend, if you are one of those traders who wants to get into multiple positions, the only reason reason I've gone into multiple positions is, let's say I want to cut a trade in half. Let's say I usually do 10 lots. I'll just do 2 5 lots. And then when one of them gets to one of the TPs, I'll just cut one of the whole positions and leave the other one running, something like that. But I don't really think it's smart to every time price kind of pulling back, you just keep getting buy positions, buy. That is not trading, that is gambling. 2 questions on here we can go over is, what is a pip? Everyone always asks me, what is a pip? So pip stands for point in price or percentage in price. What kind of, like, why that makes sense and why it's important in trading is that's how you kind of are able to tell how much money you're risking is by your pip count, as well as what lot size you use based upon how many pips your stop loss is, how many pips your take profit is. So breaking it down a little bit more is that, let's say for GJ price is at 168.4, whatever, 486 or whatever, that second number is a pip after the decimal point. Or if you go over to GU, the 4th decimal place over is the pip count. So based upon how many pips price moves, you're going to then do a lot size. And then every time, with the lot size is how much like money you're risking per pip movement. And then, the calculation is like, let's say you have a 10 pip stop loss and you have a, $100,000 account trying to risk $1,000. For the broker that I use or whatever, I would use around like a 10 lot, depending on what the currency price is, because there's different contract sizes. And if you don't know what a contract size is, I can answer that next. But basically, let's say it's $10 per, per movement or whatever. If you have 10 pips and you're risking $100 per pip with that 10 lot, that means if it goes 10 pips, you're going to lose $1,000. So that's how you're able to get it, have proper risk management, is understanding what is my stop loss size, how many pips is that, and then that'll be able to determine what lot size you use. I guess the other question is, what is a lot size? The lot size is what you actually enter into your trading platform, then enter in the trade, which is just how much money you're staking to like either win or lose. So the next question I want to answer is, what are we really trading? Because a lot of people are out here trading forex or trading, indices, whatever, but they don't even understand like what it really is they're trading. So let's talk about forex, because for people out there who don't even understand, yes, we're changing exchange rates, but what that really means is that, let's say we're trading Euro USD. If anyone's been, is in the US and knows that there's a different strength between the US dollar and the euro, how that is calculated, there's definitely different strengths against each other, is you actually can go over to, let's just pop over to the chart, to Euro USD or whatever. So you could see that price comes over here, Euro USD. You see how there's a number on the side of the chart? Whatever this front pair is always equal to 1. So this is 1, and you can see here, whatever price is at, so right now it's at 1.05025. So this is basically telling you that 1 euro is equivalent to $1.05. So that means that it costs more dollars to equal a euro, which that is showing you that the euro actually has more of a strength than the dollar. So this happens with all different currencies against each other. And that's what shows, when you talk about like inflation and the different like strengths of a given currency, that's why, there's different deflationary assets you can invest in, like gold and this and whatnot, because if you anticipate that the dollar is going down, you either can go and take your dollar and put it into those type of assets, or let's say you have like $1 billion in US dollar and the US dollar is going to be decreasing in value, you're most likely going to go put that and then exchange it for a currency that's actually going to be increasing in value, like let's say the euro. So I hope this is a good example of like what you're trading. You're literally trading the strengths of exchange rates against each other. So like if you're trading Euro USD, trading USD JPY, you're trading CAD, CHF, whatever it is, that's literally like what we are trading. Another question, how many people are profitable? So there's all these different numbers we get, around 99% and 95%, but even if it is 95 to 99% of people are not profitable, that is still showing you that it is really against your odds to be profitable in trading. You really have to lock in, congrats to anyone who is taking the time to watch videos like this. You're doing the extra work, but the odds really are stacked against you, against you. It is not easy, but not everyone learns the right information. And as someone who's gone through so many different lessons, courses, this and that, YouTube videos, I know that it's just because there's so much information out there, it's really hard to grasp what's true, what's not, but I promise you it is very, very, you really can become profitable. Are the odds against you? Yes. Is it hard to become profitable? Yes. But is it possible? Yes, I promise you. How long does it take to become profitable? Dude, this question I get asked all the freaking time, which goes to what I said about learning the right information. Like I said earlier about trying to invest in a mentor, I really, recommend it. But like I said, even if you don't want to do a mentorship, if you're watching a YouTube channel, only trade like the person you want to trade like and study that one strategy. Everyone thinks that there's this golden strategy out there and they keep chasing after it. There's no such thing as a golden strategy. There's only taking a strategy, critiquing it over time and figure out what kind of win rate you have to have, and then what kind of risk reward you have to then be profitable with that win rate. What's your average, what's your favorite pair, what stop loss you're going to have, what type of trader you are. All that goes into just being active in the markets, journaling, and then just trading every day. And all those things are slowly gonna, get better with journaling and trying to become a better trader. What is the best time frame to use? It really depends for anyone out there. I do think that the higher time frames are easier to kind of tell, but I just don't have the patience to be like a swing trader on the higher time frames. So it really has to do, with your strategy and what fits your strategy best. Because like to me, I use 5 and 15, but also down to like the 1 minute, you know what I'm saying? So it really just depends on your given strategy. How many pips a day/week are considered profitable? So this is kind of a funny question, but I actually do get, asked that. So I don't really care about pips or any of that type of thing. I care about risk to reward, because if you know how big like your stop loss is in pips, you're still gonna be risking the same amount, or you should be. So let's say you're on a $100,000 account and you wanna risk $1,000. Well, it doesn't matter if you have a 10 pip stop loss or a 30 pip, you're still gonna have to then, change your lot size to then still risk only that $1,000. So I don't really care about how many pips, when you're talking about like how many pips a day/week you are to be considered profitable. I don't care about pips. Tell me about percentage and risk to reward. So if I'm risking 1% at $1,000, I hope I make 1, 2, 3% on that given position. So if you make anything over 0% on that week, risk to reward wise, you're profitable. Even if you didn't, I don't even care about a week. I care about the end of the month. If you're profitable at the end of the month, there we go. So it really has to do with percentage based risk to reward, and if you're getting over 0%. We'll finish it up with these last 2 questions, but how much should I deposit with? This really has to do with how much money you're willing to lose. Don't put any money into an account that you really need. Consider it kind of gone when you put it into account, not because I don't believe in you, but because as someone who's gone through the trials and tribulations and you've gone and listened to it from a bunch of other traders, is that trading is hard. It's not always going to be easy. So make sure you guys actually are doing your due diligence to learn the skill set before you go and put money even into an account. There's a reason why there's demos out there. There's a reason why there's paper trading. There's easy mistakes you can avoid of, without having to lose your own money on demo. And then once you're starting getting profitable there, then I recommend to go deposit money that you might not need, put it into there, or invest into a prop firm. I think that's the best way to get access to larger capital to start making money in the markets. And the last question, what are the best currency pairs to trade? I would say the best currency pairs has to do with your strategy and what kind of risk tolerance you want. If you like indices and fast moving stuff, obviously you're gonna want to trade indices or gold or something like that. If you like slowed down pairs, gives you a little bit more time and kind of focuses on structure a little more, you're gonna probably do more forex pairs. You know what I'm saying? If you want to try to 10x your freaking money, you're probably gonna try to do crypto or some type of meme coin trading like that. But ultimately, pairs, the most traded pair is Euro USD, GU, and UJ. Those are the most traded pairs in the entire kind of like forex market, but there still is other pairs like US 30, NASDAQ, those type of things that are really fun to trade. And if you do have a risk tolerance and you like moving pairs like that, those are gonna be really fun for you to trade and learn. But ultimately it does come down to what kind of trader you want to be and what kind of things you want to focus on based upon your strategy. But that is it, guys, going over what are the most Googled forex questions. I tried to go through, give you guys as much value as I can. If you want to see more videos like this, make sure to comment below and tell me what you want to see, and I got you guys. But hope this was helpful. Make sure to subscribe, and I'll see you guys on the next video. Peace out.